Hello everybody, welcome in and thank you for joining.
Hello everybody.
I've got to now figure out how I turn on my other camera. There it is. Let me see if this works. Yeah, hopefully that does work. No, it didn't work. Whoops. There we are. Ha. Juggling. Thank you all for joining. It is Tuesday. That means OCTA. Happy Tuesday, everybody. Crypto market cap is 1.06 trillion. 24-hour volume is about 25.69 billion. Let me make sure this is in my face. Bitcoin's 27.4. It's been stable after all that happened over the weekend and everything else. Bitcoin dominance just shy of 50. So it hasn't really gone anywhere. Ethereum about 1570. ETH dominance was 17.7%. Crypto fear and greed is at 50. Exact same place it was a weekend ago. And the market has shifted its stance because we're hearing dovish talk out of the Fed. The Fed is very concerned that things are going to break. Yeah, at last. We'll touch on that as well later too. And now I've got no key, so I'm going to have to do this manually. All right, disclaimer, this is edutainment. And don't forget, if you want to get smarter, subscribe to the channel. I will not waste your time. There'll be no 5-minute advertisements for anything. It'll just be me and data. Every minute, KPM is what that stands for. Okay, let's talk about the crypto stats today. You can see I've got 2 weeks ago and today. The market cap is a little bit higher than 2 weeks ago, despite everybody thinking the world is ending. And the users are down, however, from 5.9 approximately million users to about 5.538. But transactions are up from 34.8 million to 37 million. So, all in all, crypto is still alive and well. Let's jump into the good news. There is actually a lot of good news. Well, mixed news. Let's talk about results. This is crypto divided by Bitcoin over the last 7 days, how things have performed. There's only 2 dark green spots this week, and they are Monero and Render. They smashed it this week. The rest is kind of red. But remember, a lot of those names are green a week ago, but things can change very fast in the crypto space. Let's look at the dollar performance over the last week. You can see here, Bitcoin down minus 0.6%. Not a biggie. Solana is down 4%. Ethereum down 6%. Tron a little bit. A lot of red, a little bit of light green. But again, very few things actually beat Bitcoin this week. And the market was not that bad considering. We had a pretty good bounce the first week or the first few days of October, and then it kind of petered out. Now, on the other hand as well, stocks have been on fire, catching everybody by surprise. But I said at the beginning of the year, if the first 5 days of the stock market are strong in the beginning of January 2023, the next 6 months will be very good. That happened. Then Q3 is sucky. Then Q4 is amazing, and that's happening already, and much of these are driven by the AI narrative. Look at all that green: Amazon, Tesla, Google, Apple, Microsoft, Nvidia. Even the pharmas are up. The only thing that's down, the only red you see there is XOM, it's ExxonMobil, which is weird considering price of oil has been strong, but sometimes oil stocks go counter to oil price. That's why you need the macro model. Anyway, let's talk about Bitcoin halving clock, because part of the story today is about 40 days to go. We now have 189 days to go to the Bitcoin halving, and that will take us to April 17th, 2024. And that date, April 17th, has been stable for quite some time. When I first calculated it a few months ago, it was April 14th. Now it's gone a little bit longer to April 17th. But remember, you take 189 days, take away 40, you get to 149 days. And why is that significant? Well, we'll talk about that too. There's a lot you can figure out from history. And maybe a lot of it is just a preconceived notion as to where things go. Zeno, thank you for coming. But this is the story. This is why this video is entitled 40 Days to Go. Because November 21st, 2023 is critical. And a shout out to Sanjay as well for sharing this graphic with me. He got it to me before I could find it myself. There's going to be, maybe, if history repeats, there'll be a little sideways, maybe a little bit more sideways for the next 40 days. But just like the previous 2 cycles, at this time, basically based on the pre-Bitcoin halving run, all right, on one date with these cycles where they lined up perfectly, that date was November 21st. Okay, and then what happens? right after November 21st, things go up. Now remember as well, the last cycle had that dip. That dip was due to C19. That was not normal. So barring any black swans, it could be just 40 more days to go before things get very, very bullish for Bitcoin. And we'll see what happens, and it'll be exciting to watch. Either way, I do think this time will be very different because of so many factors, particularly the amount that is being accumulated by long-term holders. Those holding more than 182 days is now 80% of the bag of Bitcoin. Only 20% are short-term holders, and that is historic. Okay, very historic. We'll talk a lot about some historic stats today as well. The last 90 days have been very historic in many ways. Fear and greed, as I mentioned, it's still at 50. Flatlining, just like a lot of the spot volume. Flat, which is good. It's not too exciting. Let's look at Bitcoin dominance. A lot of people talk about Bitcoin dominance and how critical it is. But again, you're measuring Bitcoin against cryptos, and 98% of cryptos are garbage. So it really is a bit mistaken. You need to, just like the S&P 500, 7 stocks matter. Same thing in crypto. Only a few names matter. And you've got to look at their performance and don't be obsessed with Bitcoin dominance. But just for perspective, I thought this was interesting. It shows you where Bitcoin market cap came from in the past, in that greeny color, and how it's grown. When Bitcoin first came out in 2010, the market cap was like $100,000, and then it shot up to nearly $1 trillion. But the orange line on the right-hand side is the Bitcoin dominance. And you can see over time, there was no other crypto up until late 2012, and then it started getting eaten away by things like Ethereum. And Bitcoin dominance fell to an all-time low of about 30, and that was in late 2017. And then up to a high, and I think it was halfway through 2020. It hit about 72%, and then down to 40. Now we're back up at that kind of 50 level, give or take 49.8, 50.35, depending on which source you look at. But basically, Bitcoin dominance perspective will bounce around in this floor. I don't see it going much beyond 50, 51 right now, because the value prop for the layer 2s and layer 1s that are coming in are stunning. We'll talk more about those too. Let's look at correlation between Bitcoin and Nasdaq that we look at every single week. Bitcoin is down 10.4%, so it's up from last week, and QQQ is down 1.2%. So again, they're beginning to rise together. More correlation on, which could be a good or bad thing, but anyway, considering where we are, not bad. But considering the strength of the stock market driven heavily by technology, this is good, and also the flight to safety. That we'll also talk about in a minute. Now we're going to switch gears. We're going to talk about liquidity, net liquidity, global liquidity, and the impact on Bitcoin. Now, I did touch on this in DCA yesterday with the team of Ivan and CTO, but here, these are central banks that are basically issuing more money. They're quantitatively easing. As Bank of Japan and Bank of China, I expect them to ease a lot more going forward. I also expect Bank of England, Berzini, and European Central Bank and the Federal Reserve to also flip to being looser for many reasons. And let's dig into a couple of them right now. First of all, China is a mess. If you've seen my real estate videos, you would have heard about names like Country Garden and Evergrande, but here, these two are together. So the Country Garden, for example, had the equivalent of 187 billion in liabilities as of June this year, including 15.3 billion in international bonds and loans, and according to its statements. And it looks like they're not going to be able to repay that. Now, if you look at Evergrande and the little chart on the left, $4.68 billion bond due in 2025, just one of their bonds, it's worth 5 cents on the dollar. So when a bond goes to 5 cents on the dollar, it means nobody has any confidence it'll ever be repaid. It's just gone. So for China to fix the situation, they're going to have to print more money. That's what I think is going to happen. That global liquidity is coming back. The US is printing a lot of money. They are printing it, but in a covert way. It doesn't hit your pocket yet, but it will. Now, one of the problems out there in the world, and trust me, this all comes back to Bitcoin. So a little journey. I had a lot of questions over the last 24 hours about banks. How safe are they? How secure are they? Or which is the next bank to go bankrupt? Well, US bank losses on HTM, which is held to maturity assets, have soared to an all-time high of $400 billion. There are banks like Bank of America that are holding a big part of this bag, and technically, if they weren't bailed out by the BTFP program from the government, which is quantitative easing, they'd probably be underwater right now. They'd probably be folded into JP Morgan, like a lot of the other banks that happened earlier this year, back in March. Now, then the Fed comes out and says, well, Fed's Kashkari, we have more work to do on making banks resilient. Now, when they say something like that, it's really code for, because they don't show their hands, at least Kashkari doesn't, but this is code for, uh-oh, our banks are in trouble. Our BTFP program is being tapped out way more than we expected. And this held to maturity exposure, because of the bond market, because of higher interest rates and everything else falling apart, is a big problem. So this is like a red alarm fire, and there will be more shoes to drop. I expect before the end of the year, a couple of banks will hit the wall. We'll see, unless, of course, the government bails in and helps them out. Now, let's look at Bitcoin again. Some interesting things happening with Bitcoin. Oh, by the way, the point of all this is global liquidity will return, in case you missed that. But I kind of teed it off on, but I went down the banking rabbit hole. All over the world, there's too much debt. The interest rates are too high. It's not sustainable. Governments will print more money. It's that simple. Pretty straightforward. Now, let's look at Bitcoin. This is the Bitcoin RP, which is realized price. Then you have the long-term holder realized price, and then the short-term holder realized price. Now, I added little arrows so you could see, and let me kind of walk through this chart. First of all, Bitcoin price has been fighting with the short-term holder cost basis since the start of October, and it fell below this cost basis back in August 15th. Now, the cost basis for the short-term holders, that little red arrow on the right, is exactly 27,909. We are now at 27,400, so we're about $500 shy of where we need to be. So we're under that short-term holder basis, but for a bull market in many people's eyes to be officially on, we need to be above that basis, but we're really, really close, and we were above it a few days ago. Now, the other two lines that are kind of interesting are the realized price is making another turn to get above the long-term holder cost basis, which it failed to do back in August. And here you can see the long-term holder cost basis is $20,641, and the realized price is $20,317. So we would like that average, the RP, to go up and exceed the long-term holder cost basis too. It's another kind of bullish sign for the market as well. Mr. Kelly, thank you so much for coming. So that's a little bit of these lines here, but probably the most important one is for the Bitcoin price to get above 28K as soon as possible. Now, let's talk about global liquidity again, because this ties in. There's a direct correlation between the more liquidity globally that's in the market, the more it rises all boats, not only stock markets, but also crypto and Bitcoin. So it's kind of hard to see, but that little blue tail at the bottom is global liquidity, and it is pointing up over the last week. It's ticking up a little bit, and again, per the data I shared out of China, Japan, soon to be Bank of England, European Central Bank, and the US, they will start printing. It's just, you can look at your watch and you count down the seconds. Now, what's also happening too regarding Bitcoin, this is a view of Russia. And a lot of people are feeling a little bit uneasy right now in Russia. And this can be seen directly because they're looking for a safety raft. And what is that safety raft? Well, that's Bitcoin. This is the Bitcoin to Ruble daily volume, and it has spiked hard. So for some reason, the Russians are getting very nervous right now, and they want out of rubles into Bitcoin. We did talk yesterday as well about how certain countries have certain, and on the weekend, I think on Saturday, certain characteristics of countries and rulers and economic situations really make Bitcoin a no-brainer, and we're seeing that happen right now. And this, fiats are collapsing all over the place. Just watch this space for the next 4 or 5 years. You'll be stunned. Now, Bitcoin versus silver, another kind of safe haven that is no longer a safe haven. People have been worried a lot, and I've answered so many questions about the paper versions of gold and Bitcoin, can change their real world prices. Can paper Bitcoin put a lid on price so the price doesn't go up? But the problem is there's a big difference between Bitcoin and gold. For gold, it's impossible to know if there is a gold backing to the paper that exists, which makes things very risky. But on the other hand, with Bitcoin, it's much easier to prove and check, making it much more trustworthy. And on this point alone, believe me, forget the other 20 advantages that Bitcoin has over gold. I believe Bitcoin will smash gold performance over the next 8 to 10 years because you can verify it. Therefore, I know a lot of people are worried about paper and manipulation by the JP Morgans and the BlackRocks of the world, but they can't because it can be so easily verified. And also, long-term holders are not selling too, which makes it even better. Now, let's look at security of the Bitcoin network. The Bitcoin hash rate is exploding upwards, and this is from the team at Blockware Solutions. By the way, the previous chart is from BTC Direct and the Rational Root, just giving credit there. And you can see, but this hash rate is really going to hurt miners. You know, I've been talking a lot about how after the halving, maybe half of the miners will have to unplug their machines unless they have the latest and greatest machines and a very low electricity rate of like less than 5 or 6 cents per kilowatt hour, or they're toast. And this is making it more and more competitive. And you're seeing a lot more miner names now pivoting. It's like, oh, I'm going to be an AI compute company, or I'm going to work on hosting, or repairing rigs, etc. That's just not going to cut it. So really be very careful which miners you hold. And it'll be very important that their hash is very effective and efficient. Now, let's look at Lightning Network capacity too. This jumped 17% in the last week, which is extremely positive. This is from a look into Bitcoin. Again, the total, I think, number of Bitcoin now held on the Lightning Network to support that capacity is about 5,250 Bitcoin. So this is all good for the chain, bring about much more adoption and some payment capabilities as well, which is very, very important for the chain. Let's look at the big three. Last week, a lot of people are very concerned about Binance, but Binance has been holding strong, only fell 3%. Ethereum down 5% for the week. Ethereum really has been a laggard, and Bitcoin has been flat for the week, like we mentioned before, at that 27.5 kind of level. So not a lot of action there, but Bitcoin has been outperforming these other names so far. Now, in terms of spot ETF news, there have been big moves as well within the Grayscale, Bitcoin, and ETH Trust. Just to refresh your minds, I think 3 weeks ago, the discount was 21 and 27. Last week, it was 21 and 31. And I look at these numbers every day, so I kind of remember them. And now it's minus 16.8 and minus 27. So we are now low. Well, the 16.8 is far lower than it was 3 weeks ago. It did spike up, though, 2 weeks ago and a week ago. But the Ethereum discount is exactly where it was a week ago. So we'll watch this space carefully. But remember, the ETH discount as well was at 55 about 2.5 months ago. So it's come down to half that level in a very short window of time. But this is very positive, having that GBTC discount over Bitcoin coming down to this level. This is nearly at its low it has been at for years as well. So it's another further sign that a spot ETF is coming. We just don't know when. Okay. Now let's look at money flows. I always say follow the money, follow the developers. Digital asset investment products saw inflows for the second week, totaling $78 million. ETB volumes did rise a bit as well, about 40%. Bitcoin volumes, I can't remember what they did exactly, but steady Eddie, not too bad. 90% of the money actually was in Europe. So the Europeans are pumping money into Bitcoin much faster than anywhere else, faster than the Canadians and faster than the Americans right now. And Bitcoin got 43 million of that 78 million, so a little over half last week. But more interestingly, there was another development as we look at the little names that are getting money. And there's one name that has been getting money all year, which is kind of insane. But last week, the important test for the Ethereum investor appetite following the launch of the 6 futures-based ETFs in the US was very dismal. Nobody was buying the ETFs for some reason. I think the ETFs attracted just under 10 million in the first week, which is a pittance considering the market cap of Ethereum. Anyway, after that tepid appetite, we did see a little bit of money, though, flow into Ethereum, 10.2 million. But year to date, 104 million has left Ethereum. But if you look at the other red box, you've got Litecoin flat for the week. Short Bitcoin up 1.2. People were nervous. Cardano up 200,000. But 24 million bucks flew into Solana. It has been the darling all year, and it continues to be the darling. It saw the largest week of inflows since very beginning of 2022, and it's continuing to assert itself as the altcoin of choice, particularly in light of the recent Ethereum product launches, which is interesting. And just to put that in perspective, that dollar amount here compared to the others of Sol this still being the darling, the amount last week alone represents a huge chunk of the total amount, nearly a quarter of the total amount invested in all the funds just in 1 week. Year-to-date flows 55 million, and the year-to-date flow as a percentage of assets under management is 46.61%, which is very big. By the way, the next highest intake is Cardano, up 24%. So Cardano has had a year-to-date flow of 6 million and assets under management of 25 million. And then XRP, year-to-date flow of 14 million, assets under management 62 million. But the pink one is the one that has been changing a lot of heads. So let's switch gears and talk a bit about the AltSeason Index and where we are. We know Bitcoin has been strong, and you can see it here. The AltSeason Index at 39. It's still teetering on the side of Bitcoin as we go forward. Let's look at the top 3 winners and losers last week as well. XMR, Avalanche, and Bitcoin. Bitcoin having a 7-day return of 0 puts it in the top 3. That's kind of funny. The losers, BSV and BCH. These are the forks of Bitcoin, and Arbitrum down 11%, down 31% year to date. And that's why you need to look at tokenomics, ladies and gentlemen. That's why I built a compendium. It can predict this stuff like clockwork. Let's talk about one of these names, Maker. Okay, Maker was number 1 in one of the other metrics I'll show you in a minute. One of our metrics and one of our dashboards. But this one here, everybody's asking, what should we do at Maker? Well, what is Maker? Well, Maker is a decentralized finance platform. It's an old school platform. It maintains a stable coin called DAI, and DAI is pegged to the US dollar, and it's backed by ETHE and other cryptocurrencies. And it has been doing very well so far in this early bull market the last 10 months. It is up 200% off the floor and has a zombie coefficient of 3.3 as we go forward. So it's actually at level 1, which means it's very lively. This is kind of one of the things we're working on to determine if a token or an asset is dead, alive, rebounding, or very frothy. It tells you all real quick. Now, let's look at the top 50 over the last 90 days. You can see here on the top, you've got XDC and Maker, number 2, and Link, and Tron, and XLM, and XRP, all green for the last 90 days. Solana's there too, Hedera. You can see a stable coin. And then those on the right, Litecoin. A lot of people are very excited about Litecoin because the halving, and people were interested in the Grayscale Litecoin fund. I remember somebody asked me, I said, please just don't buy that thing a couple of weeks ago. And here we are, Litecoin down 30% over the last 90 days. Graph is down too after a very strong late 2022. Aptos, ICP down. Matic continues to struggle and suffer. And that's just the nature of the business. Now, this is from our compendium. This is a view of the actual performance of the top 50 over the last 30 days, not the last week. That's a separate chart. But you can see where Bitcoin ranks in the green there, and then things to the left have beaten it. Maker is number 1, Solana's number 2, Chainlink number 3, Render number 4, Aave number 5, and then Bitcoin Cash number 6. Bitcoin Cash was number 1 a couple of weeks ago. But again, things rise up and then they fall down. You want things to rise up and continue rising up if at all possible. Now let's look at all the ETH ecosystem. It's still a beast, and it accounts for a huge amount of transactions. And despite my plans for Ethereum, when I see charts like this, and a shout out to DJ as well, who brought this to my attention, what's even more stunning is the number of transactions on ETH and the L2 ecosystem. So L2s now run over 70% of ETH transactions, and that total is about 3.5 million a day. And for comparison, there's names like Cardano do about 30 to 35 1,000 transactions a day. So the ETHE ecosystem does 100 times more transactions than Cardano. But the key is layer 2 solutions accounted for 61% of those transactions in Q3, which is big. And I also want you to cast your eyes on this little green area here. This is Base. This is Coinbase's layer 2, which has taken the world by storm because of SocialFi. I don't do social, so I don't. It's nothing. You can't really buy Base anyway. But if you could, that if Base was a token and had good tokenomics, I'd say get all over that straight away. Let's look at daily active users, layer 1s, layer 2s. Near protocol, next one we'll talk about. Nearly 700,000 daily active users. Ethereum 315K, Polygon 298, Solana 241, Arbitrum 104. Arbitrum was at 300,000 daily active users a few weeks ago and it's just gone. Aptos 59, Sui 7,000, completely failed. Phantom 30,000, Avalanche 27,000, Cosmos 23,000. So the question is, what's going on with Near? Is this something, because you guys know I do focus on daily active users. I think it's a very important other indicator of livelihood of a chain. But the problem is, just like, Base is driven by FriendFi or whatever it's called, this is Near protocol. It has been gaining adoption in recent months because of two dApps launching on the platform that have become very popular. And those two dApps are driving all of the user base. However, the price of the Near token has been steadily decreasing since November 2021. And again, per our new ATR model, it's dead. It qualifies as a zombie. Can it rebound? Yes, it can, but this chart is kind of scary. So I have to dig into why Near is so bad right now, because the tokenomics are not catastrophic either. They're not good, but they're not terribly catastrophic compared to other names. And I'm just wondering, is Near just not able to monetize the dApps the way other chains can? So we'll see. Now, a little bit of Tesla news, because I do believe Tesla is the most important stock of our lives at this moment in time by far. But this also stresses another point, that don't believe what you hear from official reports or mainstream media. And CNBS comes out and says, Tesla's China EV sales fall 11%. And we don't even have to go into it, but the whole point of this is Tesla's discontinued their Model 3 in Q3. And they only just started mass production of the new Model 3 at the late August, beginning of September. And they weren't able to sell any in September. So there was no cars being produced that they could sell until we rolled into October 1st, which was 10 days ago. As a result, production and deliveries were naturally lower in that month, but the mainstream media will tell you that Tesla is failing and they're dying and there's no demand for their vehicles. Instead, Tesla keep reinventing themselves, they keep reinventing their cars, they keep making their production lines more efficient, more effective, and reducing costs, reducing margins. And that's why I think the earnings report a week from now will be super interesting as well. I do believe Tesla is poised to have a very, very strong Q4. The Berlin, Shanghai, Austin are all ramping. There's new products coming. And now the Model 3 is even better, cheaper, faster. Apparently the whole undercarriage is 1 gigacasting as well. So they can spit these things out really fast. So are they going to make 1.8 million cars? Yes, because they're easily going to smash, I think it's 477,000 vehicles in Q4. And now they're ramped up. They're more efficient, more effective, and ready to go. And they'll make higher margins too. So they can afford to cut prices because each incremental unit they kick out of a factory does better. And in proof that the mainstream media is wrong, this is BEVs. Now, a couple of key points here regarding battery electric vehicles. I know people who, don't like BEVs. Sounds like a drink, a beverage. But there's a difference between, sometimes people call EVs BEVs, but they're not, because EVs incorporate hybrid vehicles, which have a very small battery. It's basically a gas car with a little bit of battery that'll take you down the end of the block and back, maybe, perhaps. But what's critical here, if you look at the dominance, the Tesla Model Y dominance is the best-selling electric vehicle in the world. Okay, bar none. It's also the best-selling car on Earth, of any car. Sales volume of the Y recorded, I think, in August was 116,000, dwarfing its competitors. If you look at the number 2 on the list there, it's all dark green. That dark green is plug-in hybrid. Okay, that's not a battery electric vehicle. The little green piece is, and that's where things get confusing. So the number 2 maker actually is Tesla Model 3 after Tesla Model Y. And but the most important thing is, out of nowhere, battery electric vehicles now account for 18% of global vehicle sales. That's nearly a fifth, and it's come out of nowhere. So the S-curve adoption for BEVs is actually happening much faster than many expected. This stuff is not pie in the sky. It's not fake. It's not a fad. It's real, and the adoption is going vertical really fast. So it's an exciting time to be alive. By the way, all these videos are summarized in the II newsletter, 12 cents a day for an edition. Switching gears to the bad news, and the good news is not that much bad news today. But this is kind of, I believe it's bad news because I worry about the youth of today. But the significance of this chart, if you look at the red line, the people who do the biggest share of consumer spending are now 65 years and older. They make up 21.9% of spending, which if you go back to the year 2005, they made up 13% of spending. Now it's 21.9% of spending. And people who are 65 years and older, typically they're in retirement and they're not spending that much money, but it shows you how little others have to spend. So if you look at the 25 to 34-year-olds, they're only spending about 14.5% of the amount of money. And if you go to the next biggest group, which is the 55 to 64, they also have gone down a lot. And the 45 to 54 are the second most affluent group. So again, it looks like those who are 35 to 44, 55 to 64, and 25 to 34 all on a bit of a downtrend right now. And there's a lot of change taking place in the work environments and how much people can earn. So be prepared. Things are probably going to get maybe worse before they get better, especially with stuff like this. This is the consumer credit card. Everybody, I mentioned last week, US savings and maybe savings, many people around the world have been depleted. They don't have any savings anymore. So people are putting everything on the credit card. And many believe they have no intention to repay that. So credit card debt exploded by $14.68 billion last month. This happens at the end of every cycle. Okay, when personal savings are depleted and people take out new credit cards they don't intend to pay back. And a shout out to Joe Consorti for this beautiful chart. I like his black background on his charts. But he does believe a classic blow-off top in consumer credit is underway. And you know what happens next. This is why it also ties back to the liquidity. Governments are going to have to bail people out. They're already trying to do that with student loan forgiveness and other things. But this is serious. This, combined with very high credit card interest rates, combined with many other things. By the way, we have a survey here. People were asking what the 40 days was for. James swaps ETH for Sol, 35%. Wow, that's interesting. That's going to happen too, by the way. James receives a Cybertruck. Nope, that's not going to happen. Might happen next year, but we'll see. Bitcoin goes bonkers, 23%. Yes, that's the correct answer. And James buys more black shirts, 10%. You guys are very funny. Appreciate you all. 1,000 people completed that poll live. And thank you to the mods in the chat for doing that. And sorry about the grief tidings, but if you have credit card debt, there's many people now that are paying 29%. And if you miss a payment, that rate goes even higher and you can never escape. So get rid of it as quickly as you can. Borrow from friends and family. Just do not pay that 29% interest. Now, ugly news, a little bit of that too. Actually, there's more ugly news than bad news today. This is, in this time as different bad news, this is the longest bond drawdown in the history of the world. We are now at 38 months and counting. And bonds were considered the safe haven for the world for my entire lifetime. You know, if you want to just not have any risk in the market at all, you buy bonds. Now, over the last 38 months, bonds have smashed you. And the reason I mention this is this bodes very well for the new bond alternative, which could be something like Bitcoin to save in. So watch this space. All roads, as I say, lead to... Finish that sentence for me out there. I know you can do it. Now, another kind of really ugly news. Nobody is applying for mortgages in the United States. This is the worst level of mortgage applications since 1995. And the reason this is a problem is there are 2 million people in the United States 1.5 million real estate agents, and another 500,000 people that work in the real estate industry, like appraisers, inspectors, escrow officers, mortgage businesses. They are all twiddling their thumbs, everybody. 2 million people have nothing to do because there's no turnover in real estate, which is a huge industry. 150 million people work in the US. 2 million of them, what's that, 170th, 175th of them work in this industry. And it's ground to a halt. Now, I did promise I would talk about some history, more history today. We should all be a student of history because we can learn a lot. But over the last 90 days, these things happened. There's never happened in so much in such a short period of time. And everything is happening faster. Things are being adopted faster. Things are changing faster. But the US comes closest to defaulting on debt for the first time in decades. The Speaker of the House is removed for the first time in history. War broke out last weekend. Mortgage interest rates are the highest in 24 years. US borrows over $2 trillion in less than 3 months, 4 months, I think it was 16 weeks. $2 trillion in 16 weeks. Hawaiian wildfires burnt 17,000 acres of land. That never happened in the history of the world. OPEC cutting as much as they can. Oil did hit $95 a barrel. It was the highest in over a year. It's come back down a bit again, but it's going to go up again before the year end, I imagine, unless we have a big recession, which is also possible in Q1 2024. And the UAW striked against Ford, GM, and Stellantis, and they are smashing those companies. And to be clear, I'm not anti-union. I'm not anti-people getting paid. What I am anti is the destruction of good companies. If the people get what they want, Ford runs at a 2.5% net margin. Anything, it's already going to be depleted by competition right now anyway. So they are on a knife's edge to be profitable. And they're already losing a fortune on the only thing that'll save them going forward. So that's the problem. There's only so much blood you can squeeze out of stone. And that's kind of my issue. Just to be clear for people out there. Also, strategic oil reserve, which ties back to the history. We are still at that 40-year low. And who knows? This could be time of a war. And the reason the US has a strategic oil reserve is so they can fuel the war machine for a war. And now we've got 18 days left. And this is the lowest, as I mentioned, in 40 years. And as the fog of potential war looms, this is kind of kneecapping the US for political gain just to save, I think it's 16 or 18 cents a gallon by just tapping it, flooding the market just to keep oil prices down, to pretend like inflation is under control. It's all, I don't know, it's like a bad soap opera. Now, big unlocks this week. Back to crypto. And that's a wrap. The usual suspects are here, but we're going to get some big unlocks from names like Aptos that we've been talking about since they launched. Near Protocol, we did mention today, but it's a small unlock. Sweatcoin, another 3% will hit the market. Cyber, 11.43%, and that's a new one. Flow, $3.1 million. And ApeCoin will continue to reign on retail, 4.2% hitting the market this week. Again, don't hold things that continue to reign tokens. All right? We don't like when the dollar debases. We also don't like when a token debases. It's the exact same thing. So be careful out there, everybody. Thank you all for joining. Thank you to the mods in chat. And I'll see you all tomorrow. Tomorrow's face-off day. I shared the new calendar to go through. Sunday is Patreon Q&A. I can't even remember now. Monday's DCA. OCTA's today. Face-off is Wednesday. Thursday, I already forget what it is. Anyway, it's on Twitter. Follow me on Twitter. All the links are below and stuff. And actually go to the official links on the YouTube banner. And thank you all for being here. That's a long one. Wow. 2,400 people watching live. 40 days from now, come back and we'll see if we are right about the Bitcoin going bonkers. I think it's going to happen because history is very reliable. Thank you all. Bye-bye.